What a day. What a day. Oh, my. Upper left-hand corner, September 28th, just after the futures market close. This is the S&P 500 index futures we're looking at. My goodness, 107 and a quarter range day. Huge. Look at the candlestick on the far right there. Man, oh man. I guarantee you a whole lot of people didn't expect that to happen today. Wow, I said yesterday that, let's see, Friday and Monday's candlestick were reminiscent of the type of signal you would expect for the price to come down. Because Friday, that's basically very hammerish or hanging man. Talked about that yesterday. Even though the body's not filled in, it kind of looks hammerish or hanging manish. Okay, that in of itself was kind of, it was a green candlestick with a an open body, so okay, kind of strong, but still. And then the next day, which was Monday, yesterday, then we got that inverted hammer. Oh, those two candlesticks together. Yeah, sure enough, today was huge day. Huge. You can see just below the candlesticks there, I've got the cycle midpoint. Don't forget about that as August 7th through 8th. Now, with today's massive candlestick, big red candlestick, and we will have more of these, be certain of it. We're going to have a lot more of these this fall, this winter. But with this candlestick on this side of the cycle, this far left of the cycle, I'm going to get into that in a minute. I'm going to talk about how this is a left-hand translation, most likely at this point. And I'll talk about a little bit of that in a minute. Huge day. Stick around at the end of the video. I'll let you know whether or not I had a profit or loss. At the bottom there, you can see the VIX. We're going to skip over the momentum. That's obviously pointing down, trying to cross over. Big Daddy forecast also pointing down. But at the bottom, we got the VIX. Friday was 17.75. Monday was 18.76, up a full point from Friday to Monday. That's a big movement in volatility. And today, 4.5 point leap in volatility. I should say so, with 107 and a quarter range, almost all of it to the downside. Wow. Opened at 4429, got up to 4442. So it's respectable to the upside, whatever that is, 30, about 12 points at upside. So, if you did trade the upside and happen to get it right in the open and then close for 12 points, that's, still would be a great trading day. But of course, who could stay out of the market on such a massive red day? I bet a whole lot of people got caught out. And I feel bad for them, I do. But I'm going to show you something in a moment about how you need to pay attention to the cycles and where we see price movement within the cycle. Huge. Huge. Wow. Yesterday I put out a video about the 75-month cycle. It's a really good video you need to watch if you haven't watched it. Look for the link in the description below this video. Could change your life for the better. All right, let's go over and look at, before I get into my profit loss for the day, I want to show you something about what we call translation, cycle translation. Now, you'll notice at the top of the chart there, you got the candlesticks. I'm looking at the E-micro just because the chart's not as cluttered, so I'm just going to use this to talk about it. But if you see the green arcs there, those are cycles. Okay, if you're not familiar with cycle analysis, basically it's just the green arc is an element of time. Okay, from left to right. And where the arcs meet is a low point in price. And if you just look at this, you could just see the low points in price are at the cycle lows, right? It's just like clockwork. Throughout the summer, the cycles were very predictable. But there's something I want us to pay attention to. I want you to get this. Because if you get this, you'll have a better understanding about how the trend has changed. Now look on the left side of the screen. Stay with me on the candlesticks. You'll see kind of a yellow cross there around the middle of June. Notice where it intersects that green arc. It intersects it way on the right side of the arc, doesn't it? Almost all the way to the right side of that arc. Semicircle. Right? You got a yellow cross with kind of like an oval in the middle. That's just indicating where the high point, the high price point is in that cycle. If you look at the candlestick just below that cross, you'll see, sure enough, the highest price for that cycle was right there. It's only like 3 or 4 candlesticks before the end of the cycle. We call that a right-hand translation cycle, extreme right-hand translation cycle, where the peak of the cycle happens really, really in the far right hand of the cycle, or what we call late in the cycle. Okay, look at the next cycle to the right of it. Almost the same thing, right? Where the yellow cross meets the green arc happens on the right side of the arc, right? It doesn't happen in the middle or on the left. It happens on the right side of the arc, and that's where the high price of the cycle is. Okay, that's like right around, I don't know, July 15th or something, somewhere around there. Okay, look at the next cycle. August 17, 18, somewhere around there. Same thing. Throughout the entire summer is the same thing. The high for that cycle was all the way on the right. So prices through May and June and July, the prices for each cycle were just going up, 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 up. And at the very end, they would come down just for a few days, right? Now look at early September, late August. All of a sudden it changed. Look where the cycle high is. Look where the cross is. Right almost in the smack dab middle of the cycle. So it went from what we call right-hand translation cycles to almost an ideal cycle, where the peak is in the very middle. For those of you who've been watching my videos for a while, remember I said, is it Christmas time in September? Remember that video? I said, look at all those spinning tops. I said, something has changed. The behavior of the cycle changed, and I knew it. I could tell by the candlesticks. The behavior was different. And sure enough, it peaked in the middle of this cycle. Right there was a behavior change in the market and the trend. Right, we went from a right-hand translation, or the price peak being on the right side of the cycle, to the price peak being in the middle of the cycle. Now let's take a look at the cycle we're in now, far right-hand side of the screen. Most likely, this is the peak for this cycle. Now, we could get higher peaks later in the cycle. It could happen. But for right now, we have a peak on the far left side of this cycle. That's called the left-hand translation. You can see where the cross is intersecting the cycle on the left side of the arc, right? The left side of the cycle. It's not in the middle, it's not in the right. This is really important to get this. It's like a moving picture. For some of you young people, you probably don't know what moving picture, you don't really hear that phrase anymore. Today we just call them movies. But in the old days, it was called moving pictures. And when I was a kid, they still used to have them. You would take a bunch of pictures and they would stack them in order, and you would flick them like a deck of cards. And you would see a movie. Picture after picture after picture. That's the way you have to view this from left to right. As you look at the cycles, you should just be seen as a moving pictures. The peak of the trend is moving from right to left. You should be able to get that as like in your mind's eye. The peak is moving from right to left, right out in front of you. It's kind of like driving a car straight down the road and then you make a right-hand turn and go up on the on-ramp. So everything that was in front of you starts going off to the left, right? You're good at making a right, go up on the on-ramp, you notice everything is going off to the left. That's what's happening to the cycle peaks. They're moving from the right to the center to the left. From right, if you just think about a clock, it went from 3 o'clock to noon to 10 o'clock, right? Or from 2 o'clock to noon or 12 o'clock to 10 o'clock, right? It's moving from right to left, counterclockwise. That's what the peak is doing. And the reason why that's important, that tells you that the price trend went from a positive price trend, upward momentum, to now there's downward momentum. The price trend has changed. And it's the more you do cycle analysis, the more obvious it becomes. To me, it just sticks out like a sore thumb. I can just see it. That we now have downward pressure, and we can expect downward pressure on the average for probably through November. That's my best guess. Okay, I'm going to come back to the S&P 500 review before we finish. But, and I want to talk about something there. I have a divergence line we're going to talk about when we come back to that. Let's talk about profit loss. Well, boom, boom, boom. That's right, my first loss in quite a while on the Aussie dollar. $455 loss. I talked about this yesterday that I thought I was going to have to cut these things this loose, and I did. It happens. I haven't had a loss in a long time, but there you go. That was the Aussie dollar, the micro. I cut it loose at 455. Okay, let's look at the euro dollar. Boom, boom, boom. That's right, same thing. Talked about this yesterday as well. I said I may have to cut loose the euro dollar. This is the E-micro euro dollar. And the U.S. dollar has been so strong that both the Aussie and the euro dollar, well, there it goes. Sometimes you got to cut them loose. I cut both those positions loose. So, $900 loss between those two. Yeah, that's an ouch, but it happens. Is that the only thing I traded today? Ouch! Absolutely ouch! Yeah, y'all know I didn't just trade that today, right? I cut those suckers loose, but for a good reason. So that I could move my leverage onto the big red candlestick. $1,900 worth of profit today, guys. Oh my gosh. Huge. So after taking out my losses for the day, I made about $900 for the day. Happy camper. Absolutely massive day. Yeah. Wow. I'm blessed, humbled. I give God thanks. Huge day. Nice profit day. So there you go. Profit loss for the day. Yes. Remember I'd said on this YouTube channel, I let everybody know if I get a profit or a loss. Unlike 99% of those other YouTube channels out there, which I'm not going to mention any names. I'm not going to call them out. But all they ever do is show charts and technical data and talk a big talk. And they never show their profits or losses. Ever. On this channel, I keep it real. Because losses are part of trading, guys and gals. It's going to happen. What we want to do is minimize our losses and maximize our gains. That's what I did today. I moved my leverage out of those currencies that were killing me, right? I got rid of them, and I opened up my leverage and used it for what? For positive, profitable trading. That's how you got to do it. You don't sit there and cry, oh, I took a loss. I won't trade again for months. It broke my emotions. Get over it. Don't trade like that. Suck it up. Move on to the next trade. That's how champions are built. And I said this before. Champions have short memories. Meaning they don't remember their losses. They just look forward to the next win. And they just keep pushing forward from the next win. And their wins crush the losses, guys. That's how champions are born. Okay, that's how champions do it. Okay, that's it for the profit loss. Let's go back and look at the S&P 500 review as I get ready to finish up this video. If you look in the kind of in the middle of the screen from left to right, you see a yellow line there. Big yellow line. What is that yellow line doing? Why is it going across the entire screen? Let me look at something just real quick so that I can get you the price on that yellow line. It's pretty important price. I think it's, 4238. 4238, 4238. Right now we're at 4346. So what's up with the 4238? That's divergence that goes all the way back to May 10th. And I won't dive too deep into it. It has to do with the Dow theory. But on May 10th, the divergence between the S&P 500 and the Dow Jones Transportation began. And it's still going on. I talk about it all the time. And until the S&P 500, most likely this is the way it'll play out. Because historically it plays out usually this way. The S&P 500 comes down and resinks with the Dow Jones Transportation. It's only rare it happens the other way around. Okay? So most likely the S&P 500 is going to have to come down back to its May 10th high, which is 4238. That's at bare minimum. I think it'll go beyond that. But that's when it'll finally come back to the May 10th high, where the divergence started. The chances are really high it's going to do that. I'm not saying it's going to do it tomorrow or the next day. I don't know exactly when, but chances are high. 4238. For somewhere kind of in the immediate future. I don't know, week or 2 or 3, whatever. It could be days. I'm not sure. Okay? Like I said earlier in the video, if you didn't watch my yesterday's video about the 75-month cycle, you need to watch it. The numbers about where I think we're headed are in there. Big spreadsheet with a lot of analysis. I took a few weeks to put it together. Really good video. Could make you a lot of money. All right, for tomorrow, I'm going to say the same thing I said yesterday. I'm not saying a word about what I think price action is going to do. Oh, no, sir. Not this early in the cycle. Today was a huge day. You know what I did today, guys and gals? I traded the market that's in front of me. And you need to know how to do that. You need to, I said it before, for those of you that are new to the channel, start really small. Take a really, really small position. Get good at being profitable in small positions. Then you'll know how to trade the market that's in front of you. Meaning the day you're on. How do you trade the day that you're on? A lot of people struggle with that. That's why it's good to do a really small position. If you're trading stock or whatever, or ETFs, okay? I trade futures mostly. Okay? For those of you that are trading the reverse ETFs, just do it small until you get good at it. I don't like trading ETFs because they rebalance them, and it really is at the expense of the traders when they rebalance them. Usually hurts the traders. Usually works against your profitability. That's why I don't like to trade ETFs. All right. I think tomorrow is going to be a really good opportunity. A really, really good opportunity. I talked about range. Lately I've been talking about range. When we get to the midway point of this cycle and start getting to the back side of this cycle, or the right hand of the cycle, then I might start talking about what I think the candlesticks are going to do. But not probably, I'm going to refrain from talking about day-to-day candlestick, up, down, green, red. No. Now is not the time to be talking like that. Now is the time just to trade the market of what it is on each individual day. Okay, once we get past the midway point, and as we see what this thing's doing, right now, guys and gals, this looks really weak. Now, we may get a green day tomorrow and some green days and whatever, I don't know. But this cycle looks weak. This is a left-hand translation cycle, like an extreme one. It looks really weak. What this means is, especially if it breaks below that little yellow line that the candlestick is touching right now today. Okay, especially if it breaks below that. But what this means is, as we move forward, as we go forward in time, the likelihood of price decline is increased dramatically because of today. The likelihood of a new high in the immediate future is lower, right? The chances of an all-time high are now diminished. Not saying it can't happen, but the probability of it have come way down. There's a greater probability that price will continue to go down on the average, okay? So that's how we're going to handle this. That's how I look at this whole thing, okay? Until I get to the midway point in this cycle, I just trade each individual day, okay? So you need to, if you struggle with that, you need to fine-tune your craft by starting really, really small. If you're trading futures, do one contract. Trade the E-micro, one contract. If you're trading ETFs, okay, still, just a few shares until you get good at it. If you're a hit and miss trader, you're losing, you're gaining, you're losing. If you're losing just more, same amount you're gaining, or you're losing more than you gain, and you got to be honest with yourself. A lot of people aren't, but whatever. Okay, you got to strip away all the anxiety and all the garbage, and that's how you become a good trader. Okay. All right, if you haven't subscribed to the YouTube channel, go ahead and click that subscribe button. Give me a thumbs up. I really appreciate it. And don't forget to click that little bell to be notified of all the videos as they come out. Talk to you all real soon again next time.